let's give you your favorite stuff, which is economic news, and
Yeah.
what's going
Well,
on.
there's been a bit, right? Since the last week and a half or so, we've had a lot of data points coming through, and most of them have shown that the economy is still in an expansion phase, or is at least not contracting, and in some places shows that the inflation is resilient. More, it's not going to be that transitory phenomenon that we were hearing about maybe a year ago when this whole process started, but no, it's here to stay. And so we have an article here about the recent numbers we got for January, showing the month what happened in the CPI, what happened to
Mhm.
inflation, and it's continuing to slow from its high in June of 9%, but it is not slowing as much as it did month to month in the previous months, right? So we're having a change. It was last month, December, there was a 6.4% rise year to year, and now that we're down slightly, we're still down from the high of 9.1, but we're up from December. We're at a 6.5 year over year, or year to year. So that's showing that there's a slight uptick, and it's being driven generally by housing. If you when we look at the numbers, that's the main thing. The acceleration was driven by shelter costs. That's the main thing, and which is interesting. That shows that the housing market is still strong, even with with the rate hikes that we've seen this far. So yeah, that's it's good. It's good for the economy in a macro health sense, GDP kind of sense, but it's not so good if you're the Fed and you're looking for signs that your rate hikes are pulling some of that demand out of the system, trying to pull inflation back to that 2% target. It says that, well, we have more work to do.
Also, if around your neighborhood in your family, I know that in the markets that I'm around, it's the common thought is that, well, things have already started slowing down as far as new development and production goes. So a lot of the effects from the rate hikes and the continued rate hikes we know are going to come. We, as you see right here in the prices, we haven't felt that yet. The retail consumption's been high. Certain home prices have been propped up for a while. So a lot of those recessionary effects that people have been waiting for, well, they still haven't come. And
Yeah,
that's
there's a
part of,
lag.
there's a lag, and that's part of, we took a little holiday break and we're back in the swing of things, but everything we talked about happening has been happening, which is why we kind of took a break. The good news about macro perspectives is that if you come with a kind of patient, mature, long-term outlook, then you kind of sit back and watch these things play out over quarters. And we're here to talk about, there will still be opportunities during these times, great opportunities, but this isn't, oh, everything's changing next week or tomorrow. I mean, when we
Right.
look at what the Fed is talking about, let's continue to go over the jobs reports and different numbers, but with everything, the future targets, there will be more tightening of,
Yes.
a
Well, the
reduction in
jobs
liquidity.
numbers, the jobs numbers really make that point clear. So we had a really strong job growth in December. So, or I'm sorry, that was January. My bad. So January, 517,000 jobs were created, so much greater than what was the estimate. It shows that the labor market hiring is continuing to happen at a really robust rate, and the labor markets are one of the things the Fed is focusing on. They know that they're not going to bring inflation back to target with a labor market that is kind of on a boom, honestly. And so that's another that data point with the jobs came out a few days prior to the CPI numbers. So we're just getting more and more data points that says that, hey, demand is still there. Job growth is happening. Houses are still being purchased. And so you're generally seeing an inflationary impetus throughout the markets. And yeah, that's the general that's the takeaway from this.
Hey, if you like that clip and you want to hear the rest of it and learn more about macroeconomics, cryptocurrency regulation, and the opportunities out there, hit the link right here for the full conversation that we had, or here, wherever we put it. I'm not sure. But you can also support us by hitting the like button and the subscribe button. So when we drop our next content, you get it right away and don't miss those opportunities. also there's more.
Yes, if you would like one-on-one assistance or even a group meeting, we can provide consulting and advice on crypto gateways and exit ramps, as well as securing your crypto, as well as swapping, storing, or staking, or NFTs, or any of the above. So feel free to fill out the form at our wisebeyondbitcoin.com website. We'll get back to you and schedule a meeting.
Absolutely. We've been in blockchain and crypto for several years, since the 2017 ICO days directly, and following it since the beginning, actually, and been in economics and finance for years before then. So we look forward to helping you in your education journey. Feel free to let us know if you're just looking to learn more about market diversification. Blockchain and crypto, there's layer ones, layer twos, NFTs, applications being built. So if there's something we can do to help you, we look forward to it. Until then, thank you. Namaste, and have a beautiful day.